guys, Kill here. Welcome back to another weekend edition of the Trading Edge. My apologies in advance if my voice is a little raspy or if I'm a little bit off. It's about 3 o'clock in the morning here. It's been an interesting weekend, a lot of travel over the past 2 days, and we came back and we turned our clocks back here in the US. So my internal clock is all kind of bonkers right now, hence why I'm up 3 o'clock on a Sunday morning doing a Trading Edge video for you. But figured I might as well be productive. Now, I want to talk about a few pairs in today's video. I want to talk about the dollar, yen, and the Aussie Canada. But I also want to follow up on the New Zealand dollar. And this is a pair that we talked about on the third day of our trade to measure trading event. We actually talked about it on the first day when we were teaching how to read a price chart. And then we came back to it on day 3, looking at a tradable opportunity. So if you guys haven't seen the walkthrough of this already, or if you missed any portion of our free event, today is probably going to be the last day that these recordings are up. Maybe Monday morning we'll take them down, but make sure you catch up on them. It's 9 days of free plus training on back testing, psychology, reading a price chart, strategy development, really all of the questions that you guys asked us during the event. And I'll throw a link to this in the little description box below. But heading over to our first pair of today, the dollar yen, I want to walk you through really what's on my mindset and what's on really my prediction for the week to come if something were to happen. But first and foremost, just to kind of recap and take a look at what has happened on the dollar yen. This was a pair that we looked at a few weeks ago. We called a very nice head and shoulders pattern. You can see it lurking up here. And we put in a pretty decent move to the downside, establishing multiple targets. Now, after we've gotten to that target level, we just started to consolidate. And if you guys remember from this week's event, consolidation is when price is going sideways. You can see kind of this up and down flow. We tried to break to the downside here, couldn't quite do it. And eventually, right, we broke above this level of structure right here. And this was a very important move for me as far as making a prediction on what I think price action is likely to do next. Now, we are at another current level of structure. If we look left at this big high momentum bearish candle right here, draw a little arrow to it, you can see we have held that level and price is starting to double top there. Now, many of you guys look at a double top as a reason to sell, and that can certainly be the case. Double tops are one of the really one of the conservative trade entry techniques that we teach our traders. But something that I always say is it's not the what, it's the where, meaning it's not necessarily what is happening in the market as far as the pattern formation, whether it's a simple pattern formation like a double top or a pin bar or a doji, something like that. It's the where it happens at, because really there's no point of entering a double top short if you don't think we're at an area where we want to sell or where price is likely to go lower. So this is not one that I'm interested in. Doesn't mean that you can't be interested in. Just me personally in my trading, I'm not interested in it. What I'll be looking for is a violation of this level. So if price action were to violate this level, then where is price likely to go next? And an easy way to project that is by taking a one-to-one measured move. So an equal length move of our previous impulse leg up. If I go ahead and copy and paste that and just drag it onto here, we have what's called an AB equals CD pattern or an equal measured move. And we can see that that equal measured move comes right into one of our previous VS1 levels looking left, which essentially is a visual representation of structure resistance. And just like with the New Zealand dollar trade that I just showed you, or hopefully you saw the recap of, there's 2 ways we can play this, there's a few ways, whether we're a day trader, whether we're a swing trader, whether we're counter trend, whether we're a trend continuation. But I'll give you guys the real basic version of this. If you're looking to sell, the next level to sell is going to be right up here at our previous level of structure resistance. If you're looking to buy, then if we were to get a break and close above this double top, right, a violation of that pattern, then anywhere from here, right, let's call it, what's the highest here? 113.40s, anywhere from 113.40s up to that prediction level, which is about 114.60s, right? So about 130 pips. Those are going to be buying opportunities most likely on the lower time frames, maybe your hourly chart, which is going to be like your intraday, short-term swing trading time frame, and of course down on the day trading time frames as well, where you may have multiple opportunities to get involved. So dollar yen is certainly one of the pairs on my radar for this week. Another pair that's on my radar is going to be the Aussie Canada. And this is a pair we took a look at a few weeks ago as well. I actually took a short trade on here. I did a big video about Aussie Canada and the interest rate deal and all of the horrible things that are happening over in the Australian economy. And I took a long-term short opportunity on here last week that did get stopped out. It was right around this area. But if there's anything that we know as trend continuation traders, you have to be willing to take a shot, lose, take a shot, lose, take a shot, lose, and then be able to take that trade that ends up being that big winner that's going to make up for all those losses. Now, I'm not a trend continuation trader by nature. Because of that reason, I prefer to have a little bit higher win percentage than what most trend following traders are, but that's the concept. And if you're someone that's looking for those really big moves, that's what you want to catch. So my analysis stays the same here as the last time we looked at it. And just to give it in short, if we bump out to the weekly, if you take a look to the weekly chart, there's a massive amount of room to the downside. I forgot the actual level. Let me just load up a weekly real quick for you guys and double check it. But if you're a Tier 1 member, just go back and watch the movie. Told you it was early. My brain's all messed up. Go back and watch the video from about a week ago called Home Run Trade on Aussie. Let me just load up some data real quick and show you guys what we're looking at. That's not what I want. Where is my data series? There we go. Let's load up about 5K. Let's see what that gives us. But bigger picture, here you go. Bigger picture, we project down to our lower VS1 level around, let's call it the 88 cent level. And you can see we're trading at 94 right now. So there's about a 600 pip plus move of potential profit here still on the Aussie Canada. So going back to the 4-hour chart, let's go back to the daily. Going back to the daily chart, very similar to the dollar yen situation I showed you, we're putting in what's called a complex pullback, which is essentially a multi-level pullback, right? You can see price action has been in a bearish trend, right? Top left to bottom right. Here is our previous outside return. So this is the key point that we would need to see violated if we're going to have a rotation in trend. And you can see that once we put in that new structure low, we put in a multiple leg pullback, right? AB equals CD pattern up to this level. And right now we're retesting previous structure highs. So same as applies before, right? Look for your selling opportunity up here. Stops need to be above that previous outside return. We'll go ahead and make that red for stops. Targets, obviously there's a lot of ways to take targets depending on what type of trader you are and how risky you want to be, but I'll give you guys some very conservative targets just to give you an idea of the risk reward. A very conservative target level is going to be, well, super conservative target level will be a retest of these lows right here. You can see that gives you more than a 1-to-1 risk reward. A more aggressive level, but still conservative in the bigger picture, is going to be a retest of previous structural lows. And then, of course, your bigger targets are going to be down at that 88 even level, which is all the way down here. Of course, actively managing your trade on the way down. That way you can secure your profits or at least reduce your risk on the way down. So a second opportunity here on the Aussie Canada. So two opportunities for you, looking at 1-to-1 measured moves today. Let's probably call this video ABCD pattern, something like that. But hopefully it gives you some good perspective, as always, on how I do analysis in the market. Gives you an idea of what type of trading opportunities I'm looking for. And of course, these aren't signals, but these are just opportunities for you guys to see the process in which I go through when I'm trading. So remember, catch those recordings. They're going to be up probably just until Monday morning. We'll take them down. And of course, welcome to all of the new Tier 1 members. I will see you in the Monday Q&A. That's going to be, check your time, because we did change our clocks back here in the US. We moved them back an hour. So we're kind of back to how we were before everyone else moved them back an hour, which is a whole different topic in itself. But I wish you guys a great trading week. I'll see you guys in Monday's Q&A. And until then, plan your trade, trade your plan. Take care.